Hello, everyone. This is the notification that this webinar is being recorded and will be published online to reach even wider audience. So if you do not wish to appear on the screen, kindly keep your microphone mute and disable your video. Now it is time, so welcome everyone who is joining us in the first of 3 webinars on building strong trade capacity in the Caribbean with market intelligence. My name is Pichaya Sam Amon. I will be your trainer today. Today's session will focus on international trade statistics, which will take the guesswork out of selecting attractive and viable market for your exports. This series of webinars is possible thanks to the close collaboration between the International Trade Center, Caribbean Export Development Agency, and the Sridhar Rampal Center, University of West Indies. Before we begin the training, I am honored to welcome 3 esteemed guests for the opening remarks. First, Pamela Koch-Hamilton, the Executive Director of ITC. The floor is yours, Pam.
Thank you so much, Pichaya, and good afternoon, everyone. Good morning from Geneva. It's good to be here, and I'd like to welcome everyone to this series of 3 webinars on building strong SMEs in the Caribbean through trade and market intelligence. It is a pleasure to be launching this in collaboration with the Sridhar Rampal Center of the University of the West Indies and the Caribbean Export Development Agency. These are 2 institutions very close to my heart, and I'm delighted that ITC is deepening its partnerships here in the region. COVID-19 has devastated the Caribbean business ecosystem, from lockdowns and closed borders to tourism restrictions and job losses in key sectors. The region will be forced to reset if it is to recover. A critical part of this reset is to provide the tools to the small businesses to help them to adapt their business strategies to what will be a new normal, where more is done online, competition is greater, diversification is key, and quality and service will take priority. Access to timely, robust, and relevant information is essential to take advantage of emerging opportunities in the region and across the globe. As temporary measures have been put in place and global supply chains have been disrupted, informed decisions are what will separate the winner and the runner-up. ITC's market analysis tools offer exactly this. As a pillar of our global public goods, the tools provide access to trade statistics, company contact information, customs tariff and non-tariff measures, foreign direct investment, export potential, among other crucial information. Even the global temporary measures related to COVID-19 have been mapped, so businesses can stay on top of the latest disruptions and the latest opportunities. Over the years, these tools have collectively helped policymakers and businesses around the world enhance their export development and make data-driven decisions. In 2020, we reached a significant milestone of more than 1 million registered accounts and reported a cumulative trade impact of over $1 billion globally over the last 4 years. According to ITC calculations, an additional $7.8 trillion of trade in goods could be realized globally, with an extra $7.2 billion of that untapped export potential coming from Caribbean states. To turn this potential into reality, countries and firms need access to timely and relevant trade data. The overall theme of this webinar series is building trade capacity with trade intelligence. Why? According to ITC research, 7 out of every 10 new export companies fail within 2 years. And one of the major causes? Insufficient or inadequate market research and analysis. But it does not have to be this way for current or future Caribbean exporters. With free access and a clear route to training around these tools, we can help to build greater competitiveness in the region. This information and analysis is freely available to you, to SMEs, to business support institutions, to academia, and to policymakers. This is possible thanks to ITC's funders, including the European Union, who appreciate the importance of UN agencies like the ITC providing these tools as a global public good. Additionally, capacity building activities like this one ensure that these tools can be utilized to their full potential and contribute to the creation of business opportunities and target policy design. Due to the COVID-19 pandemic, we have not been able to meet you in person and deliver face-to-face workshops. However, we're all becoming accustomed to online solutions and reaching you through these carefully customized webinars. And be assured that my team is an email, a phone call, or a WhatsApp away in case any additional clarification is required. I wish you an excellent session and I look forward to hearing the rest of my colleagues. Thank you.
Thank you, Pam, for your leadership and encouragement. Next, we have Neil Paul, the Director of Sridhar Rumpel Center, University of West Indies. Welcome, Neil.
Thank you very much. I would like to say that to the distinguished ladies and gentlemen, that it is with some immense pleasure that I join with my colleagues in welcoming you to today's session. I'm Neil Paul. I'm the director of the Sridhar Rumpel Center for International Trade Law, Policy and Services at the University of the West Indies at Cavell campus here in Barbados. The SRC is pleased to be partnering with our long-standing friends, the International Trade Center and the Caribbean Export Development Agency, to host this three-part webinar series. As one saying goes, operating without market intelligence is like driving with your eyes closed. Outlined within CARICOM's 2021 trade policy agenda includes the region's participation in several high-level trade conferences, such as the UNCTAD's 15th session, the WTO MC12, etc., along with the desire of many member states to diversify trade partners and products and to improve the terms of trade. Absent the market intelligence needed to make better trade and business decisions, our negotiators, our MSMEs, our manufacturers, our farmers, our fishermen, our service providers, artisans, women, our youth, all of our importers and exporters, we are driving blind. Recognizing therefore the critical role that market intelligence plays in building strong trade capacity, I trust that this webinar series will equip governments with the information needed to guide successful trade negotiations with new territories, importers and exporters, with the tools to assess new trade opportunities, and even academia with the data to spearhead new frameworks and thought leadership capable of better integrating the region into the global trade landscape. In closing, once again, I would like to welcome you to the first session of this three-part webinar series, and I invite you to join us for the other two sessions on April 7th and 9th. I also wish to thank all the distinguished speakers that will be conducting these sessions and you, the audience, for taking time to participate in this series. I hope that the information learned here will be applied to improving the trade capacity of the respective countries and our region as a whole. Thank you, and I will now hand over back to the chair.
Thank you, Neil, for your words and collaboration with us. Next, we have Deodat Maharaj, the Executive Director of Caribbean Export Development Agency. The floor is yours, Deodat.
Thank you so very much. Good morning or good afternoon to you, Pam. Good morning, Neil, participating exporters, colleagues from the private sector, ladies and gentlemen. Good afternoon, good morning. We at the Caribbean Export Development Agency, we are really pleased to partner with the ITC and the Sridhar Rumpel Center for International Trade Law, Policy and Services at the University of the West Indies. We believe, like what Pam has articulated and Neil, we believe and we recognize the importance of market intelligence as a really critical component to a firm's business strategy to enter new markets or gain greater market share. For this, we are really grateful, Pam, to the ITC and to you, Neil, and colleagues at the SRC. We are grateful to you as well as we embark on further deepening and consolidating our partnership. We in the Caribbean, we are facing more than challenging times. First, we had the challenge of climate change, now COVID-19, and building a recovery and building resilience where business plays an important leadership role is critical for us going forward. And to do that, to penetrate new markets, to access investors to the region, to steer them our way, market intelligence and this information is absolutely critical. I mean, we in the Caribbean, we are renowned for our culture, music, and of course, sports personalities. Of recent times, we know that Caribbean food and beverage brands are trending internationally. However, we believe that the true potential of regional brands has gone relatively unrealized due to a lack of high quality information to aid in decision making. This information deficit has really hampered our firm's ability to effectively penetrate not only international markets, but also regional markets. The lack of market access information to target markets is compounded by exporters' limited knowledge of the factors that determine supply and demand in these markets. While market intelligence and research are key ingredients for success, they are not the only components. For Caribbean firms to enter foreign markets successfully, a wide variety of complex and interrelated determining factors need to be addressed in a comprehensive and integrated manner. As an agency, we have recognized the importance of high quality, accurate, and timely market information to aid in decision making. As most of you may be aware, Caribbean Export is a regional agency with a mandate to develop and increase exports from the CARIFORUM region. And I don't think there's anybody more aware of the role, remit, and function of Caribbean Export than one Pamela Cook Hamilton. And Pam, we're delighted with this continued commitment that you have for the region and this partnership. So Caribbean Export, recognizing the International Trade Center as a significant resource in this area, is always happy to collaborate on interventions geared towards export development. Last year, the Caribbean Export hosted 3 sessions on ITC's market analysis tools targeted to firms producing or manufacturing natural products, alcoholic beverages, as well as sauces and condiments. We were delighted by the high level of interest shown, with well over 100 firms participating in the sessions. More recently, just 2 weeks ago, Caribbean Export, in collaboration with the EU delegation in Barbados, we hosted a webinar entitled the EU CARIFORUM EPA, Enhancing Reciprocal Trade and Deepening Regional Integration. The response exceeded our wildest expectations, with over 450 businesses and participants from 51 countries, including 294 from the CARIFORUM region. So it shows a hunger and a thirst for engagement, interaction, and business opportunities for sure. Looking ahead, we really need new markets. I don't think there's any doubt about that. And we are particularly interested in Africa as well. I think we need to translate our inextricable historical and cultural and people-to-people ties into business opportunities. I mean, I have lived and served in Africa. And when I think about Africa, I think about Rising Africa. And the recently launched African Free Trade Continental Area is the largest free trade area on the planet in terms of the number of countries, 54 countries. Africa is just 5 or 6 hours if there was a direct flight from the Eastern Caribbean to Accra in Ghana, for example. So we are keen to continue to partner with ITC on building that relationship with Africa going forward. And I would also, Pam, like to thank ITC for its important leadership role in this area of information. And we also recognize the value of partnering with the Sisridat Ramphel Center. And Neil, we want to continue to do this going forward. I exchanged messages just last week on having a much more formalized internship program to give opportunities to your students to spend time with us at the Caribbean Export. So today is just one in this 3-part series. In the coming weeks, we look forward to hearing some more from the ITC team on the pertinent sources of information, which will help you, the exporters, to tap into and analyze trends in trade data, identify markets and products with high potential by having a better understanding of the international demand for your products, the export performance of various sectors, and the tariff and non-tariff barriers that you're likely to face in terms of market entry. We are really excited by the wealth of research information that this series will present to us, and Caribbean Export hopes that both exporting firms and the students here with us today from the SRC can make use of this valuable information as we seek to improve the competitiveness of our region. We recognize that Caribbean Export, and as I'm sure Pam knows and Neil, that information is really power. And we are at a critical crossroads in this Caribbean of ours. Either we business as usual will get us to where we are now, which is not in a good place. And we need to be innovative, we need to be pioneering, and we really need to develop products and to enter with niche products into niche markets at premium prices. And we believe this webinar will help us on this journey. Again, on the issue of information, we are in the midst of preparing or finalizing actually our new strategic plan. And we are keen to continue to work with partners such as the SRC and ITC as we also transition to becoming a one-stop, non-stop shop as a knowledge hub, for businesses here in the Caribbean and investors who are interested in our region. So colleagues from ITC, colleagues from the SRC and participants, thank you so very much for listening to us, and rest assured of our continued commitment at Caribbean Export to support your efforts. Thank you so very much and have a great day.
Thank you, Deodat, for SEDA's important work within the region and these inspiring remarks. Now let's start the training on international trade statistics. This training will last 75 minutes, including Q&A segment. And before I proceed, I would like to do some housekeeping and remind you to please keep your microphone mute during the presentation. We have a dedicated time for Q&A, so please submit your question in the chat box. We will go through it. By muting your microphone, you avoid disturbing other participants who are participating in this webinar. Okay, so let's continue. First, I would like to introduce myself. My name is Picha Sam Amon. I work at the International Trade Center here in Geneva in the Trade and Market Intelligence section. In our section, you might have recognized our work. We disseminate online tools such as TradeMap, Market Access Map, Export Potential Map, among others. Today, I will be introducing you to TradeMap in particular. So we will spend time on TradeMap, going through different features and functionality. We will take a specific scenario of an exporter of a specific product looking for a new market. So the first poll, let's go for getting to know each other. Tell us more about you. I just launched a poll, and for those of you who sees the poll in front of you, please feel free to respond to this poll. This poll will stay on for 1 minute in total. I can already see that this group is a mix of trade advisors, researchers, exporters, future exporters, and even none of the above, but you are all very welcome to join this particular webinar because we believe that ITC's market analysis tool, particular TradeMap, appeal to different audiences. If you're looking for a new export market, certainly the tool will serve you well, but if you're also a policymaker, a consultant on export market, or even you're just a student at a university, you will be able to use the tool in your daily life. So we are concluding the poll right now. Let me show you the results. We have trade advisors with us, 29%, followed by none of the above. So this is obviously a very wide audience. And then followed by researchers, future exporters, and exporters. So I will close this poll and continue with my presentation. It's always good to know your audience, so I will be able to customize and touch on wherever relevant to the to the audience that we have here today. Again, I would like to remind you that this webinar is being recorded and will be published on YouTube. So if you do not want to appear on the videos, kindly keep your microphone mute and deactivate your video. Okay. So first of all, you have heard from our Executive Director, Pamela Cook-Hamilton, about ITC, but the main takeaway from this particular slide is that our mission is to foster inclusive and sustainable growth and development through trade and international business development. And, you know, after COVID, we have seen that there will be resurgence of SMEs in the future, but we are not looking for short-term growth. We're looking to assist you and support you in building back better and in a more sustainable way. And there's no better way to start doing that by using the available data that we have. What makes ITC extremely unique is that we have a clear focus to help SMEs internationalize. We are also extremely nimble in our interventions. And we're always customize our intervention in specific countries and regions. Where ITC's market analysis tool sit among all of ITC's focus areas is the first one, by providing trade and market intelligence. And this also fit within Sustainable Development Goal 8, decent work and economic growth, and also Goal 17, partnership for the goals. ITC's market analysis tool, recently we just celebrated 1 million registered users, as Pam has mentioned before. And over the years, more than 20 years ago, ITC started with TradeMap, which is the tool that we will be discussing today. But over the years, we also have developed new tools to respond to the growing needs by our users and ever-changing landscape of international trade. In session 2 and session 3, you will learn about market access requirement and export potential by 2025. So looking ahead, as well as small discussion about other available trade databases that you can use. Today, we specifically focus on TradeMap, but I just would like to remind you that we also have tools that address specific subjects such as rules of origins, price of agricultural product, sustainability, voluntary standards, investment, and procurement. So these are all ITC's market analysis tool, and they're all free for all users in developing countries. As you can see here, that users from developing country account for more than 85% of our total users, and the tools is entirely free for them. Latin America and the Caribbean also made up the largest group of users of ITC's market analysis tool. All this has been made possible thanks to the donors to ITC Trust Fund and the European Union. Now, as I mentioned before, the tool recently reached the milestone 1 million users. Yes, the majority of our users are developing countries where the tools are free, but our tools is world-class. That means they're also being used by private company in developed country who has to do market analysis or supply chain management. They are paying for the subscription to use our tool. It's not a high amount, but this is just goes to show that because it's free doesn't mean it's less competitive. On the other hand, our tools are extremely competitive and really up to date to respond to the needs of our users. As I mentioned before, the companies who are using them, also consulting firms, government agencies, business support institution, MSMEs. So it's really a tool that appeal to the entire trade community per se. Now I will have a second poll because I like to have my session as interactive as possible. And so I am going to be launching the poll, and let's keep it on for 1 minute as well. For those of you who can see that on the screen, 123 of you, I would appreciate if you participate in this poll to keep this session as interactive as possible, to see if we are on the same page. Thank you very much. I can see the number rising now. So I will keep this on for another 30 seconds. So far, this is one of the most interactive group that I have ever had. I am really pleased to see that more than 90 of you have already responded to this poll. I will be sharing the result of the poll as soon as we reach 100. So we're almost there. And then I will also explain about this particular question as well. There's no right or wrong question, but I just would like to bring to your attention our approach to this particular training session and why we're here. As we have heard from the three leaders of the three organizations, they all say that data and information is absolutely critical in making decisions. And 85% of you agree that careful selection based on the sound and systematic research, so basically a data-driven analysis, can deliver huge benefits. So therefore, we should prioritize country where we want to export based on the available data that we have. Now, export market research, as you may know, can be expensive and time-consuming. Prioritize your research and resources is thus essential. This market selection process helps avoid costly mistakes and can ensure that your company can build sustainable export. Continue to the next slide. Often, markets are chosen with little analysis. Some examples of potentially false leads that can result in poorly researched market selection include unquestioning acceptance of media articles, seminars, and conferences that focus only hot and boom markets. I can tell you that this is not one of those seminars or webinars, because what I will do is that I will help you approach the choice of export market with open mind and make sure that your decision in the future be data-driven. What we should also avoid is a tip from business associates whose business may be very, very different from your own. For example, I saw that we have Umeda, who is an exporter of turmeric, with me here. If she would accept a tip from someone who's currently exporting cocoa, it would be completely different. It would not have been applicable to her product. So what we should avoid is to listen to tips from business associate whose business is completely different from yours. Then the next thing to avoid is to avoid unsolicited order, because when you have an order that is unsolicited, you might think that there's a high potential for sales development in that country, when in fact it's a one-off event. So this is something that requires investigation, and not for you to make investment, long-term investment, to enter that market without properly study that market. The next thing to avoid is the positive impression gained during your holidays or business trip that do not reflect day-to-day reality. In order for you to develop a strategy to export to a certain market, sometimes when we have this good impression during holidays, we have bias and lean towards that country. But that requires investigation, and in-depth and neutral investigation. So this is also something to avoid as well. The next thing to avoid is to follow the leader. For example, you know that your competitor are active in a particular market and you suddenly assume that you need to be there too. One solution doesn't fit for all businesses. So what you have to do is that you have to find a solution that is suitable for your own business and not just simply follow the leader, go to the traditional market. This is not true. This is no longer true anymore. What TradeMap will do is that it will open your eyes to 220 countries and territories. These are all potential markets. You do not need to export simply to traditional markets anymore. Just like what Deodat have said, he would like to see the Caribbeans export more to Africa, more business, more trade with Africa, because you're just only about 5-hour flight away. This is not a traditional market, but could be market that represents high growth for you. Finally, the last thing to avoid is to look for comfort factors where business setting appears on the surface to be easy and friendly. Again, I could not stress enough that the goal of this entire training session is to show you that evidence-based analysis is the best analysis to save you money, to save you time. A common mistake is to decide on a particular market before proper research. Even if you are very, very familiar with the market, it is smart not to assume it is the best for you. Take time to double check if there's not another market or markets that suit your business better. Always approach the choice of export market with an open mind. This is my recommendation, and this is what we're trying to do with TradeMap. Because TradeMap, we collect the trade statistics from national authorities around the world. We cover 220 countries and territory, all the product under the Harmonized system. And we have the monthly, quarterly, and yearly trade statistic for you to analyze, and even the data at national tariff line level, which is the most detailed level. It is indeed one of the largest trade flow databases in the world. So if you're looking for data, you enjoy looking at data, you're in the right place, you're in the right webinar. Okay, at the end of the day, normal guessing, we make data-driven decision to export. We reduce risk and build your export plan. Just like what Pam said, 7 out of 10 new export companies fail within 2 years. We have to avoid that. We have to avoid that, and we can avoid that using the data. So stop guessing and start knowing. Start getting to know your market before you make that decision. So first things first, in terms of TradeMap, TradeMap is based on something that is called the Harmonized system. It's a system that has been created by the World Customs Organization, defined by World Customs Organization for classification of products. It allows you to participating country to classify traded goods on common basis for custom purposes. HS code comprises approximately 5,300 product descriptions that appear as chapter, heading, and subheading. And as I mentioned on the screen, as you can see, it's standardized. So every single country uses the same code up to 6-digit level. So I am from Thailand, for example, and if you're from Suriname, if you're from Trinidad and Tobago, if you're from Grenada, Guyana, or the Barbados, if we talk about a code, which is, for example, 220840, okay, we look at this particular product is the sources. We can all agree that this is a code for sources. All the custom officers from all the countries around the world would agree on one specific code to have a common understanding. And this is what it represents. So it could not have been more important for you to define the righteousness code for your product. At the end of this, you will notice that the more numbers added to the code, the more specific and more detailed it becomes. I've already mentioned that it's categorized into 3 parts. First of all, chapter, heading, subheading, you see that at chapter level, if you talk about chapter 18, for example, you're only specifically talking about cocoa and cocoa preparation. So it's a very wide chapter. It comprises of all different types of product within this chapter. And then in order to be more specific, it's called headings. And headings, we add 2 more digits to the aforementioned 2 digit, which is 18. So it's now become 1801. This is only for cocoa beans. And then 1804, it would be for cocoa butter. 1805 is for powder not containing added sugar or other sweetening matter, but it's a cocoa powder. So you see that it's already much more detailed and separate between the beans, the butter, and the powder. Okay, and then subheadings is the most specific level for HS code. Is 6-digit level. This is the level that is still standardized across all countries. So it has 6 digits in total. For example, 180100, cocoa beans, whole or broken, raw or roasted. So this is a specific code that we will investigate today. So for example, even if you're located in Jamaica, Trinidad and Tobago, Dominican Republic, you can use exactly the same code to investigate the demand, the level of competition of this particular product by using this code. So this is standardized across all countries. Only when you have decided on the market, you should investigate at the national tariff line level to have the most specific data. So if you do not have a market fixed in mind, you can investigate at HS 6-digit level, 180100, cocoa beans, whole or broken, raw or roasted. There are also different types of data available in TradeMap. As I have mentioned before, we have a group of colleagues who directly collect data from national authorities around the world. They submitted the data to TradeMap. We process it, we upload it. This is direct data. So it's the data national authorities submit to ITC or UN Comtrade. For example, at the end of every year, every country around the world, every country and territories are supposed to submit their national trade statistics to the UN Comtrade. And when the UN Comtrade received it, they share it with ITC, of course, because ITC is also one of the UN agencies that deals specifically with trade. So these are direct data. However, in certain countries who do not have the capacity to provide direct data at the end of the year, so maybe there's a certain lag, maybe they take additional 6 months to produce the data, maybe they have the data that is very old, they have not managed to share it with us. Because the lack of data, we also use something that is called mirror statistics as well, mirror data, which is the reconstructed data on the basis of data reported by partner country. And let me show you through an infographic on how it's done. So this is just an example, of course. We have the direct data from Australia, who is a reporting country. Australia is trading with United Arab Emirates, who is a non-reporting country. We use Australian data or we construct the United Arab Emirates data by using the Australian reported data. Okay, it takes a little bit of time to understand, but imagine yourself that you're standing in front of a mirror. Okay, you are Australia, you're standing in front of a mirror, and in order for you to see yourself, you stand in front of the mirror, and that's what you see, the United Arab Emirates. You use the mirror to see the non-reporting country. Okay, takes a little bit of time, but you will see it in the future. Now, what's impossible, the limitation of mirror statistics is when two non-reporting countries trade with each other. like Venezuela trading with UAE. Because UAE do not report it, we cannot reconstruct the Venezuelan data based on UAE data. So this data will just disappear. But mere statistic is still better than no statistics at all. Okay, so let me repeat one more time that trade of countries that do not report their trade data to the UN Comtrade can be reconstructed on the basis of the data reported by partner countries. Data obtained are called mere statistics. Mere data is better than no data, but it has a number of shortcomings. Okay, so for example, Australia report an export data, an export to UAE, right? So Australia have reported 10 million US dollars of sheep being exported to UAE. When you export the data is often recorded then in free on board, okay? And if you use this mirror statistics, what we can see is only the 10 million US dollars, whereas by the recommendation of the UN, import statistics should include the cost insurance freight. And this will not be shown at all because Australian export statistics is free on board, FOB. So this is the shortcomings of the mirror statistics, but like I mentioned before, it's still better than nothing. So for today's presentation, we are going to look at the product cocoa beans. The export overview for cocoa beans. Here, I extracted the data from TradeMap. The data in TradeMap right now for trade indicators is still 2019, but it will be changed in April or May to 2020 for 2021 data. This is because we have to wait for our teams to have sufficient data before we calculate the trade indicators. For example, at this point, we have around 66 countries, the data for 2020 for 66 countries, and we're trying to reach at least 90% of the global trade before we released the trade indicators. So the product that we are looking at today is 180100 cocoa beans, whole or broken, raw or roasted. So basically it's all the cocoa beans. And in 2019, CARIFORUM nations exported a total of 199 million US dollars or 73,367 tons, metric tons. This is the data that you can get from TradeMap. When you look at the time series, you will also notice that this is a drop in export from 217 million in 2018. It's a small drop. And I also acquired a list of top 5 CARIFORUM cocoa beans exporters. Dominican Republic at number 1, followed by Haiti, Grenada, Trinidad and Tobago, and Jamaica at number 5. This data is extremely simple to extract from TradeMap. I will be doing the live demonstration later. But before we do so, let's do the third poll here. We're going to spend 1 minute on this third poll. I just want to see from your perspective right now, imagine yourself as an exporter of cocoa beans. Which one of the following countries would be your target market? Just from the top of your head, which country would be your target market? Without knowing any data, just your guess. At this point, we're still doing the guessing, but by the end of this workshop, there will be no more guessing. I will keep this poll live for 1 minute in total. I can see that a lot of you are already answering, and I hope that in 1 minute, we will reach around 100 responses so we can discuss the results together. And afterwards, we will also go live on TradeMap directly. Just a reminder that TradeMap is a very powerful tool and it have many features and functionality. And normally we do training for days. So this particular session is an introduction to allow you to see the breadth and the depth of TradeMap. I would not be able to go through every single features, but I would be very happy to show you where you can consult the user support materials that we have. So now we have reached 92 responses to our poll. Let's wait 2 seconds, and now we're ending the poll. I'm going to share the results now, and most of you have said that your target market would be United Kingdoms. That is 33%, followed by Netherlands, 32%, USA, 24%. 3% of you, or 3% actually, chose Indonesia, and 7 of you have chosen Japan. By the end of this session, you will realize that there's no right or wrong answer. You can choose any target market you like, but your decision should be justified and your decision should be data-driven. So I will stop sharing the result now, and we will go live to TradeMap. The URL, I would hope that you stay with me on this. Please don't try to use the tool because you might miss some part. Also, even though this is recorded, it's better to stay together at this point and try to use the tool in your own time later. Okay, so I will share my screen right now. Okay, so this is the homepage of TradeMap. The URL is worldwideweb.trademap.org. And I would encourage all of you to sign up and register for an account. First of all, because it's free. Second of all, because it allows you to access the most detailed level of the website. For example, company data, the data at the 6-digit level, all of these are only available for registered user, and it's free. So why not, right? At the same time, you see that I have my name in the top right corner because I already registered for an account. And by registering for an account, this is particularly interesting for trade advisors and researcher because you can create your own country groups and product groups. Okay, and if you want to analyze, for example, a large set of data, specific data, you can group the products together, up to 200 products in one group. So this is something that is powerful and interesting to use. This is the same. This is, for example, if I click on my manage product groups, you will see that I already have many product groups, as you can see here: fresh food, agricultural products, processed food, cosmetic, fibers, depending on what I am analyzing on that day. Because TradeMap, when you go back to the website, the first page of the website, you will realize that it's very product specific. It serves to answer your specific inquiries. So therefore, when you want to do multiple products, it becomes tedious, a little tedious, because you have to repeat the same thing many times. To avoid that, it's better to create a product group or a country group, just like what I showed you before. So I truly encourage you to register for an account. Before we go into the tools, I would like to show you what's happening on this page. For example, we are now in home and search, and the second tab is data availability. You can check the latest data availability. For example, I click here and I check for 2020. I see that it's all green. So these are all the countries who have reported their 2020 trade statistics. Okay, As I have mentioned before, there are around 66 countries up to here: United States, United Kingdom, UK, and Turkey. These have all reported their 2020 trade statistics. Also, the next one is the reference materials. The user guides, the FAQ, glossary, harmonized system correspondences, data sources, etc. Also, it's a starting point for you to jump to other tools that I have already mentioned before that could be of interest to you. Then in more, you have the videos, the TradeMap video tutorials, as well as this video will be featured on YouTube, on our YouTube. This you will see, it brings you to TradeMap video tutorials, which has 20, I believe 20 videos in totals. Is extremely, it covers everything, covers specific theme. For example, here, market concentration, navigating TradeMap, analyzing suppliers, identifying competition. It's a short videos, about no more than 10 minutes, sometimes even 4 minutes. So please feel free to investigate at your own time. These videos have already been watched more than 23,000 times, so they are obviously very educational, well-structured, and clear in explanation. So it will be very helpful if you want to learn more about TradeMap. So I go back to the first page. I always think that it's important to familiarize yourself with the homepage, so that's why I spend my time on the first page. The next thing that I will show you, if you recall, I just told you that harmonized system is very important, and to find the righteousness code is very important, because if you don't find the righteousness code, obviously you will be doing the wrong analysis. For example, imagine that you're exporting wine. Okay, you're exporting wine. I go to advanced search and I type in the word wine. It showed me 3 different codes in total, or even 4, because there's also sparkling wine. Okay, like Prosecco, this is called sparkling wine. You see that the codes distinguish between themselves in terms of, it's not whether it's red, white, or pink, but it distinguishes itself in terms of the size of the container, smaller or bigger than 2 liters. So if you click on the wrong code, naturally you're doing the wrong analysis. So it's important to read the whole description of the code beforehand. And this is extremely useful. For example, if one of you would like to start exporting, I think Umeda, she was turmeric, I'm sorry. It identified directly for you, even though I misspell it, turmeric, 091030, turmeric curcuma. So she knows that this is the code for her, and it's not something like 091011, for example, which would have been completely wrong because it's ginger, neither crushed or ground. But if she also export ginger, imagine that she did a wrong analysis. Instead of choosing neither crushed or ground, she shows the code for crushed or ground, which is completely different, because crushed or ground has some sort of production, added value. There's some sort of process that took place. So obviously the value will be different. So it's important, again, I could not stress enough to read the description of the code. And today, as I have mentioned before, we're going to look at cocoa. So you can just type the keyword cocoa and it will show you the entire description. Okay, so for today, you have here cocoa preparation, cocoa beans. This is what we're looking for. And I have with me here 180100 cocoa beans, whole or broken, raw or roasted. Don't forget that 2-digit is the chapter, which is the biggest one. Then more detail, 1801, 180100, and this is at the product level. So we will investigate at this product level. Okay, it should have brought me back to here. You will see that is 180100 cocoa beans. What we also have to do is to select whether we want to see the import side or the export side. So for the sake of the presentation today, I am an exporter and I keep an open mind about which market I would like to export. So I would like to see the global demand. So I have to see the import statistics. So I keep it here in import. And here, the second box, you have either country or region. So obviously, if you select region, you will have something like CARIFORUM, where I extracted the data. But today, we're going to look at the country level. And what I will do is that I will keep this box blank because I want to see the data from all the countries that I have the data. Okay, so I keep it blank, and then you have the buttons down here, 5 buttons in total, trade indicators, the time series data, yearly, quarterly, monthly, and company data, company contact data. We will get to that later, don't worry. But first things first, we click on trade indicators because these pre-calculated trade indicators are very important and could be helpful to determine which market is the most interesting for you. Always read the top of the table and it says list of importers for the selected product in 2019. For those of you who selected Netherlands, I imagine that you think that because it is the world's biggest market for cocoa. It's a good justification. Netherlands in 2019 imported 2.2 billion US dollars. Don't forget that the values in TradeMap is in USD 1,000. That means you have to add 3 more zeros to the number that you see right here. So here is actually 2.2 billion US dollars. In 2019, the global demand of cocoa beans was 9.5 billion US dollars. 2.2 were imported, 2.2 worth of cocoa beans were imported to the Netherlands in 2019. The next column is the trade balance. When the trade balance is red, that means that the country import more than they export. So that means Netherlands or all those countries whose numbers are in red are actually net importer of that particular product. In 2019, Netherlands also imported 997,000 tons of cocoa beans. So you see, in terms of the quantity value, you do not have to add 3 more zeros to the numbers. So it's net numbers. An average unit value, which is computed by value divided by volume, you see that the average price Netherlands pay for each ton of cocoa beans is $2,288. This is not market price. It's an average across all different types of cocoa beans. We can all agree that there are different grades to cocoa beans. So it's across all different grades. This is just an average. So what it means is that on average, Netherlands pay this much. And then you compare it with another market like Germany. For Germany, on average, it pays 2,521 US dollars per metric ton. So on average, it pays more. What it can tell you is the fact that maybe the Netherlands is buying the cocoa bean in bulk to do the processing and manufacturing chocolate bars. Whereas if you look for another country, such that if you see here, if you just follow me closely, you see that in France, for example, is 2,646. The average unit value is higher. Is it because France has a market for premium cocoa beans, this could be very true. And you use what is available in TradeMap by itself is useless. The data of one country itself is useless. But because we bring together all this information, you are able to compare. You can compare Netherlands with France. You can compare France with Switzerland. You can compare Switzerland with Japan, for example. But what I can see here from the screen that we see, Switzerland has the highest in terms of the unit value. Per ton that they pay $2,706 US. All of a sudden, this market is a little more interesting than Netherlands if I'm an exporter or producer of premium cocoa beans, okay? So this is why it's important to benchmark and everything. Now we go to the next column, which is the annual growth in value between 2015 to 2019. The last 5 years, the 5 years here, the average at the world level is -1. So the annual growth, there's a small contraction of 1%. You see that the Netherlands, the annual growth over the 5 years is 1%. 1% is higher than -1, which means that Netherlands is becoming a more important buyer, even though they're already #1. They are becoming even more important. So any number that is higher than the world's average, that means they have gained importance over the 5 years that we indicated. This is true for the case of Malaysia. This is true for the case of Indonesia. For those 3 of you who selected Indonesia, this could be very well your justification where you're going for Indonesia, because this is a smaller market that is dynamic, that is growing. It's growing at 42% over the last 5 years. This could be your justification. But also the people who have selected Netherlands, they can also say, but I chose the biggest market. And it's also the market that is gaining even more importance, even though they're already #1. So you see, again, I would like to point out that there's no right or wrong answer, but your answer should be based on data. So let's continue on the next column, the annual growth in quantity. There's no world average because even though you see that these countries reported tons, there are some countries who did not report the quantity. And therefore, this means we cannot aggregate it. So that's why it's left blank. But what we see here is Netherlands, in terms of value, it grew 1%, but in quantity, it's growing at 10%. So you can see here that if the value doesn't grow as fast as the quantity, it simply means that over the last 5 years, the average unit value of cocoa beans imported by Netherlands has been a little declining. They are importing the product cheaper and cheaper. Okay? I just want you to take a deep breath and imagine that you go to the market today, with your $10, okay, you get 10 eggs. Okay, this is normal. But you go tomorrow with your $10 and you get 12 eggs. All of a sudden, you get more in quantity. So your eggs, the eggs that you just bought, it just means that eggs are becoming cheaper. And this is true because Netherlands, the growth in terms of value is higher than the growth in quantity. So they're importing cocoa beans that are cheaper and cheaper. Okay? Now, I am going to go to the next column as well. It's also annual growth, but over 1 year. Between 2008 2019 is 2019 actually. So you see that over the last 5 years, it's -1 at the world's average, and it's 1% the last year, 2019. Okay, why we have these 2 columns together is because you want to see consistency. A lot of things could happen over the last 5 years. So we put 5 and 1 almost next to each other. for you to see it is consistent or not. So for example, you see here, Netherlands, the last 5 years is 1%, but the last year is -6. So there's a fluctuation right there, even though it's not that bad. However, for United Kingdom, you see that the last 5 years is 17% growth in value, but the last year, 2019, is -6. So there's quite meaningful fluctuation that you have to investigate. And you have to anticipate, like, do you want to sell to a country that has this kind of fluctuation? And what do you do to hedge against this fluctuation? Okay, so my recommendation could be for the new exporter, of course, would be to go for a market that is quite consistent over the last year, 5 years or 1 year. For example, it could be a country like, let's see together, Malaysia, 6% over 5 years and 5% over 1 year. Very consistent, obviously. So this is up for you to decide. Then I will continue to the next column, which is the share in the world. Is basically the value imported expressed in percentage. You see that the Netherlands import 23.8% of the total cocoa beans, followed by Germany, United States of America, etc. So by far, Netherlands, almost a quarter of cocoa beans go to the Netherlands, which then they are processed and re-exported. Then the next column is the average distance of supplying country. And the average distance at the world level, it means that on average, one cocoa beans travel 6,855 kilometers to get to a market. This is how far they travel, an average cocoa beans. However, a country like Indonesia, for example, the cocoa beans that they import travel 13,000 kilometers on average. And this is also for Malaysia, 10,000 kilometers. That means they have the habit of buying not only from their own region, but also from other regions around the world. If you have a look at this, you see that, for example, United Kingdoms, they tend to import from countries that are located 3,300 kilometers from them. So they don't have the habit of importing from 10,000 kilometers away. So if I'm an exporter of cocoa beans from Indonesia, I will be very wary that, okay, the UK, they normally import from 3,000 kilometers away. I'm a little bit more than 10,000 kilometers away. So I know this is my disadvantage, but it doesn't stop me from exporting to the UK. So this is for you to think what's important, what's more important, what's less important. But what we try to provide you is really a 360 overview about what's going on. Okay, so then I continue to the next column, which is the concentration of supplying countries. Concentration of supplying countries. If the number that you see here is higher than 0.1%, which is the norm, when in the United States, when you do a merger and acquisition, when the companies start buying the company from the same industry, and they calculate this, and if the index is higher than 0.18, it just means that they have too much monopoly on the market. So it means it's very, very concentrated on a few players. Let's see here. Well, Netherlands, 0.27, concentrated. Germany, 0.34, even more concentrated. It just means that there are few key players in that market. So it doesn't mean that you cannot export to those markets. It doesn't mean that just because they already have established supplier, you cannot export. It just means that your value proposition has to be really good in order for you to establish that trading relationship with the counterpart, because they are used to buying from only a few people. So this is what it means. And the last columns is the average tariff. And if you click on it, it will bring you to Market Access Map, which is in the next session on April 7th. The same time, 11 a.m. Eastern and Caribbean time, you will learn more about market access requirement, etc. So, is everyone still here with me? If you're still here with me, please click maybe yes button in front of your screen so I can see that you are still with me listening. I am glad to have 125 people still here with me. So thank you again for your participation. Thank you again for your attention. I really appreciate it. I know that we are now used to Zoom, but still training from a distance is a little bit difficult, but I try to make sure that we are all on the same page. Okay, so from this page, some of you will start having ideas. Where should I export my cocoa beans? So let me set a scenario. I am a cocoa bean exporter from Trinidad and Tobago. Okay, I'm an exporter of roasted beans. Okay, my beans have been analyzed by the Cocoa Research Center at the Universities of West Indies. And the University of West Indies told me that my cocoa beans, roasted cocoa beans, are balanced, flavored, raisin-like fruitiness and floral notes, small bitterness, faintly caramelized, rich, smooth, velvet-like. So obviously I have very premium cocoa beans in my hand. I have done my investment. I have done a lot of product development, and now I'm ready to export. So which market should I export? Okay, I go through TradeMap, etc. I see a few interesting markets because my product is quite premium. So I did not think Netherlands would be a good market for me because they seem to import in bulk and more towards like the non-roasted beans. So I'm looking for market that can pay for my premium. That would be France. That seems to be Japan. That seems to be Russia. And that seems to be Switzerland. So I have decided that Switzerland seemed very interesting. They paid the highest according to this chart so far. Even though the last 5 years, the growth has been negative in value, but in quantity, it's been higher. And over the last year, 1 year, is 5%, which is way higher than the average of 1%. So Switzerland for me is interesting at this point. Even though I would discover that the market is quite concentrated because the index is 0.33, way higher than 0.18, which is the norm. What I would do is that I will investigate my market, Switzerland. I click on Switzerland. I see that this is the table for a list of supplying markets for the product imported by Switzerland in 2019. And Switzerland ranking in the world is number 16. Now I'm looking at all the people who are where Switzerland is sourcing their cocoa beans from. And I see that in 2019, Switzerland imported 68 million US dollars of cocoa beans from Ghana. So the total imported value is 133 million US dollars, right? And more than half, they imported it from Ghana. Actually, 51.3%, or 26,734 tons from Ghana. So Ghana is an established cocoa bean supplier for Switzerland. This is clear. But what you see here is that the average unit value that Switzerland pay for the beans from Ghana is a little lower than it pay from other people. So maybe those are like the normal quality cocoa beans one for them to make chocolate bars, etc., but not the premium chocolate. It's through 2,554 US dollars, whereas the average is 2,706. Now, I'm from Trinidad and Tobago. I am going to look for my own country, and there you go. You see my country right there. In 2019, Switzerland imported 762,000 US dollars of cocoa bean from Trinidad and Tobago, okay? The share, my market share in Switzerland market is very low, it's 0.6. Last year, they only bought 91 tons, but let's have a look at the unit value, 8,374. Obviously, they are buying premium product. They are buying semi-processed product. The growth over the last 5 years is astronomical, 123, rivaling only Dominican Republic. The growth in quantity, 117. The only rival is basically Dominican Republic. And the growth rate over the last 1 year is 106. So it's pretty consistent right here. So I see that somebody in my country have already paved way for me. They're already exported to Switzerland. And this is an interesting market for me. Okay. However, I can see here in this column, I will show you the total export growth of a partner country. However, in 2019, Trinidad and Tobago export growth has been shrinking at -2%. It's at -2%. So there could be the problem with production, etc. This we have to investigate further, but this does not diminish the fact that Switzerland is an interesting market for me, for my profile, for my type of product, etc. Okay, so this is what I see my position in the target market, and then I look at the competitor as well. We talk about Dominican Republic. Last year, Switzerland bought 5 million US dollars of cocoa bean from Dominican Republic, 1,607 tons at 3,134 US dollars per ton. It's high, it's higher than the average, but not higher than the average of Trinidad and Tobago. But the import over the last 5 years has accelerated so much. It's very impressive. So this is basically the one of the most competent competitor that Trinidad and Tobago will have in the Swiss market. Another competent competitor is also from Latin America, Peru, Honduras, for example. So we're looking for all these exporters are either organic or premium products. So I feel that by analyzing, I can already see that I'm in the right market, okay? And I want to investigate more. Next step would be for me to start getting to know my clients. And that's what you see here, companies. I would like to bring to your attention that the company contact information in TradeMap, we do not collect it ourselves. We source it from our partners. Our partners, we count Compass, we count Dun & Bradstreet, for example, and we have more than 1.3 million companies in our database. But this does not include all the companies in those countries. This is only the company who signed up to those two companies I mentioned. Those companies who signed up to Compass and Dun & Bradstreet, when they provide the information to those two partners, then the data is updated to TradeMap, upload to TradeMap, okay? So it's not exhaustive, but it's a lead. For those of you who answered that lead is the most important before prioritizing the market, it is important, but maybe it could come after you have already analyzed the market. So let's have a look at the company contact information module. Once you click on it, it further drills down to different categories. And what I have is, like I mentioned, premium cocoa, roasted cocoa from Trinidad and Tobago. So then I will select this category. Even though for Switzerland, there are only 5 companies who declare themselves as the exporter of this particular product, is still better than nothing. I can click through it to look at different list of product they have, list of company. You will see that there's the website, phone numbers, name of the executives, etc. So it's important for me to look at the company. So, and then I visit their website, have a look at their company. Why not, right? And then I arrive at this one. Look interesting. They say that they are the distributor, importer, exporter of cocoa and chocolate product. Interesting. I'm going to go visit their website. So I click on the website, and then it brings me to this really nice website, quite interesting. And it's available in different languages, German, English, French. So definitely this will not be a problem for you. Here, they said that they buy organics and fair trade product. They also deals with cocoa beans, semi-finished cocoa product, etc. So you look at, they work with different cocoa producer, premium cocoa producer. They buy directly from producer. This is quite interesting. And they even have a map of where they source their product, etc. So yes, all of a sudden I got a lead. And I can just get in touch with them, right? There's a phone number up there. They're present on Facebook, LinkedIn, etc. So this is why TradeMap bring that additional value to your analysis. You're not only looking for viable, attractive markets, but you can actually narrow it down to a lead as well. Okay, so that has been quite interesting. I now have only around 9 minutes. I would love to stay more with you guys, but I think we have to finish on time, and let's take some time to go through the question in the chat box. So I'm going to look at the chat box right now. Thank you for my co-host, Han, who has been answering all this question. I can see that the chat box is very active. I see 68 new messages. So this is wonderful. I hope this has been interactive. Han, do you have any question that you would like to bring to my attention so that, or we can share with the other audience? Any question?
Hi, I think most questions are about if you can do this with other product codes. So if you could just maybe, for maybe the people who were late to the session, show them where they can change the product if they can't find their code.
Okay, so basically, as I mentioned before, ITC's TradeMap covers all the products in the Harmonized system, which is more than 5,300 products. Basically, all the products that we see in our daily life, be it fresh cut flowers, honey, turmeric, avocado, all the products that we use in our life, Apple, iPhone, iPad, etc. All these have a code. And we have all those information. So, for example, for those of you, I saw the last chat was for honey. It's applicable to all the product. I'm just picking honey for this particular example. I type in the keyword. You don't have to go to advanced search, but as you can see here, that the box is quite limited. And I always prefer to see the full description. You know, even though here is the full description, but I prefer to read it in a table. So you can type keyword, and there you go. You have the HS code at the product level 040900 for natural honey. So as I mentioned, it's applicable to all the product that you guys are exporting or importing. For example, here, I type in honey, and don't forget here, let's look again. I left the country box blank because I want to see the data from all the countries around the world. And then I click trade indicators. I get the list of importers of honey. And you can see here, it is being sorted by value imported. So the biggest importer of honey is United States, followed by Germany, Japan, France, United Kingdoms. And again, I have gone through all the columns, starting from the value, the trade balance, the quantity, the growth, the unit value, etc. So it's truly a tool that is applicable for all your traded goods. Okay. And also for those of you who are researchers and trade advisors, if you ever interested in learning about just the country perspective, instead of zooming in on a product already, but you would rather see a product portfolio, what you can also do, for example, I will take the example of if I'm a trade advisor from Belize, I want to see my export portfolio. What I would do is that I can either click on total all product, or I can leave it blank, which means it's the total product. Okay, so I want to see all the product. My country is Belize. And then I can click on trade indicators. The first thing that it shows me is the list of Belize trading partners. The Belize biggest trading partner is actually the UK, followed by US, Ireland. You have the exported value, etc. But I also can change from country to product. I want to see the portfolio in terms of portfolio of products. So I click products, and you see here, it shows you at 2-digit level, which is the, sector level is quite big. So you see the Belize biggest sector is actually sugar and sugar confectionery. Okay, then followed by edible fruits, preparation of vegetables, fish, mineral fuel, etc. So this is by sector. But you can also drill down to 4 or 6-digit level, which is the product level. This can be done as well. And at the same time, what's interesting is this graph. When you click on the tab called graph, and it shows you this Boston matrix. The matrix has been divided chart into 4 areas. Losers in growing sector, winners in growing sectors, losers in declining sectors, and winners in declining sectors. So you see here that Belize portfolio, Belize has a product in losers in growing sectors such as mineral fuel, essential oil, fish and crustacean, etc. This is, as a trade advisor, when you see here, you see this is the place, this is the sector that I have to provide additional support to my exporter so that they can become winners in growing sectors. So this is also something that is quite interesting for trade advisors as well. But I'm building you up for the 3rd session, which is on the export potential by 2025. What we see here in TradeMap is a trade that already took place. It's very recent, it's very robust. It can be as recent as January 2021, which is like literally a month ago. But it's the trade that already took place. In the session 3, you will have export potential in the next 5 years. We will have the projected export potential, untapped export potential, how you can accelerate and capture that untapped potential. That will be discussed in the session 3. So TradeMap allows you to really have an overview of what's going on and and inform you on which market you should investigate further, because time is precious. You cannot investigate 220 countries or customs, so you prioritize it. And this brings me to almost at the end of my presentation. It brings me to my last poll. After all this presentation, how we discuss about having an open mind, open ideas about what market could you export to, don't forget that there's no right, there's no wrong answer. It's just all about how you justify your selection of market. Which market would be your target market after you had a look on TradeMap? Let's keep this poll on for 1 minute. I think we can learn a lot from each other. I hope that at the least today, I introduce you to these powerful tools that you will continue to use, continue to play around with, investigate your product. And what would happen is that you will face some question. You will not be able to get everything from the beginning, that you get in touch with us and get in touch with us, write us an email and find out your information, the right way to analyze things from us. So this is just the beginning of our, like, let's say, training relationship, our relationship between ITC and your company. Let our services help you. Use our services. They are free and they are completely open for you. So I will end my polling here, and I am pleased. I am the most pleased to show you that at the very end of this presentation, 29%, or the majority of you who answered the poll, said that you will choose other markets, but you will make sure that your choice will be data-driven. And this is the thing that I want the most from this training session. Okay. Again, when we talk about getting in touch, our doors are open. I will leave you with the mailbox of the people who are there to help you. If you submit an inquiry, they will answer you within 48 hours. ITC's market analysis tool translates the fragmented trade information into actionable decisions. Okay, it's a one-stop shop for successful trade analysis and market research. Let us help you. And stay tuned for the next session. We have 7th of April with Abdelatif, 9th of April with Julia Zierman. They are extremely competent colleagues, and also their sessions will be recorded for you to be able to go back to and try to capture what you didn't understand in the first goal. Get in touch with us. We are available on social media, Twitter, Facebook, email address. It's all available here, right here on this screen. And this particular video recording will also be made available on the future new page at the Shritat Rampal Center webpage on ITC's market analysis tools as well. So finally, I thank you to all of you for being here, for staying with me throughout the session. Thank you to my colleague Hannah for addressing all the questions in the chat box. Thanks to Natasha, thanks to Jan, Remy for bringing this collaboration to our attention. And we look forward to seeing you in a few days on 7th of April. Thank you very much. I hope.
Sorry to interrupt you, but I see that there was one person still handing his hand up. Andy Philip might have a question still, if you will.
Andy Philip. Do you have any question before we wrapped up? But don't forget, at the first get-go, the tools can be seem so complicated, but maybe if you just take your time and write us an email, we're also available to answer your question as well. Okay.
I just have a quick question.
Yeah, sure, Ariel.
If you could briefly just explain the what the column average tariff applied in the chart. I saw a lot of the countries had 0, but then Indonesia had, I think, something like 47. So I was trying to understand what that column was indicating.
So basically, thank you very much, Ariel, for your question. So I'm not going to go back to the table, but if you recall, it's the average tariffs, right? So you know how tariffs are applied at the national tariff line level, okay?
Yeah.
So what we saw before was at 6-digit level. So Indonesia might have a number of national tariff lines, and the average of those is 47%. But what is the takeaway is that all those countries who have 0% tariffs is because they need the cocoa beans, okay? They need the cocoa beans, and therefore they did not set any tariff wall for it to import because they need the product.
Oh.
However, if you investigate further, you will see that Indonesia is also one of the biggest exporter of the cocoa beans, especially for Asia Pacific region. So that's why the tariffs is high, because even though they need it, they also produce it, and therefore they have to protect their domestic market.
Thank you very much. That's very clear. Thank you.
Thank you, Ariel. And thank you everyone again for being here. I really appreciate it. And I hope to see you on April 7. Thank you.